Whenever the market gets choppy, people tend to run to their old favorites, and two of the biggest names in that lineup are Bitcoin and gold. So one's the ancient king of hard money, if that's how you want to put it, and the other's the digital upstart claiming to be the future. So you're probably wondering, if you're trying to protect your wealth in 2025, which one actually makes more sense? So first, let's talk about gold. It has a history of stability, it's been used as a store of value for over 5,000 years, and it's literally been money longer than most civilizations have existed. It also has a tangible value. It's physical, it's real, it doesn't disappear in a power outage or a server crash. And there's also no counterparty risk. No one has to keep the network running for gold to retain its value. It just is what it is. It's a physical thing. Historically, it's been a decent hedge against inflation and currency debasement, which is starting to matter now more than ever as central banks pump trillions into the system. And there's also the factor of universal liquidity. So whether you're in London or Hong Kong or in a backwater pawn shop in Alabama, people know what gold is and why it's valuable. Of course, there's drawbacks, like because it's physical, it's heavy, it's clunky, it's not so easy to store or to move. There's also the risk of it being confiscated or taxed heavily in extreme situations, which is exactly what happened during the Great Depression, where the government was actually buying people's gold. It also doesn't appreciate like equities or something that leads more towards exponential growth. And unfortunately, it doesn't just generate income, it just sits there and looks shiny. So now let's talk about Bitcoin. One thing that's great about Bitcoin is that there's a digital scarcity about it, which is that only 21 million Bitcoin actually exist. It's baked into the code. It's not subject to change from central bankers or politicians. It just is what it is. So that is nice. It's also decentralized, and because of that, it's censorship resistant. So there's no central authority. No one can freeze your funds or seize your holdings. And obviously the biggest thing is that it's digital. It's 24/7 access. There's no physical limits. There's no customs. There's no shipping costs. It's just a pure peer-to-peer transfer of value. And there's also a growing adoption of it. Certain institutions and companies are starting to accept it as a real asset. You have investment firms like BlackRock who actually own over 500,000 Bitcoin. So people are definitely starting to take it more seriously, slowly but surely. Of course, there's the liquidity and portability side, which is that moving 1 million Bitcoin takes about 10 minutes and all you need is a Wi-Fi connection. Of course, it has its drawbacks as well. So it has extreme volatility. 60 to 80% swings are not uncommon. There's a pretty uncertain regulatory future about it. Governments are definitely trying to clamp down and control it. And of course, there's the fact that there's no intrinsic value. It's just worth whatever people think it's worth. And it also doesn't have a very long financial history. It's only been about 15 years, and that's nothing in the grand scheme of things. So which one is actually better? Well, obviously that's a super hard question to answer. It's not something that can be covered in one video or in one conversation. I would argue that if you're trying to store value, preserve wealth, and not worry about tech risk sort of stuff, gold still makes a lot of sense. And if you're looking to take calculated risk on the future of money, generally speaking, and you're okay with volatility, Bitcoin could be the one for you. But if you're smart, you'd probably want to own a little bit of both. That's two assets that have taken completely different paths in becoming financial hedges. Thank you for watching, and I'll see you in the next one.